for our next panel, which is going to feature our colleague and CEO at Level Trading, Lanre Sarumi, as well as the chairman of the Global DCA board, Matthew Lisle, also general counsel at Drawbridge Lending, and our chairman of the Public Policy and Regulation Committee, Tony Pettipiece, also chairman at Grip Investments, DIFC, Dubai International Financial Center Limited. I'll now turn it over to the moderator of the session, Lanre Sarumi. Lanre?
All right. Hi, and welcome everyone. So our goal for this session is essentially to provide an overview of the Global DCA structure and function. And I'm going to do it from the perspective of a business and of, like Dr. Richard Santos said earlier, businesses are coming in with vested interest, and we have a lot of vested interest in the structure of the Global DCA. So that's how this conversation is going to go. It's going to be more conversational, less esoteric, and hopefully we can get some answers that a lot of other businesses are asking what the Global DCA would provide for them. So 2 years ago, we all came together, the all-stars of blockchain, digital assets, cryptocurrency. We all came together and we decided to come up with a clear structure and standard to operate in the blockchain digital assets world. And at the time, it was pretty gray. It's pretty much like what Chris Maya said. It was pretty gray. The rules and regulations were pretty gray. No one really knew if they were within the law, outside of the law, and how gray are you? Is it light gray, dark gray? And so we decided to come up with standards and come up with best practices to make this business more structured. And 2 years later, here we are launching the Global DCA. So my first question is to Matt, and Tony, you can take it as well. Is what shaped the formation and the design of the Global DCA? What models did you adopt, did you create, and what models did you borrow from other associations?
Yeah, okay. Thanks, Lanre. And thank you for serving as moderator of the panel. I appreciate your introduction. It is, as Chris said, a hard act to follow Richard and Dennis, and then it's actually a hard act to follow Chris, but we'll try. We'll try and make this a lot more conversational, less esoteric, if you say, because that's frankly the more practical objective here. So let's be clear. It doesn't make any sense, and it's pretty inefficient. We're going to sit around and try and invent something new, right? So let's not reinvent the wheel. There are tons of models out there of self-regulation that have been developed and shown over the test of time to be effective. My particular experience has been with a couple of different self-regulation models. One would be the one that probably more people are familiar with that governs the futures and options exchange self-regulation space. But I've also had some significant experience with how self-regulation works in the bulk agricultural commodity markets. So, as I said, many are familiar with the financial market self-regulation. This would be the FINRAs of the world, the NFA, and the exchanges, and how they regulate their members and markets. This type of self-regulation has been facilitated, as we know, through legislative fiat. So Congress gets together, passes an act that's part of the Commodity Exchange Act or the Securities Exchange Act that by legislative fiat authorizes the establishment of those organizations under certain oversight mandates that are given to the regulatory agencies. And then they are then funded through mandated transaction fees. These are, as we've seen over time, effective mechanisms, but I think most of us can agree that sometimes they can lead to inefficiencies that create friction in the industries that they're regulating. What we think at the GDCA is a more effective model is a model which functions based on the consensus of the industry itself without direct government authorization. This model would be based on a recognition that industries function way more efficiently for all if they are governed by the better angels and the expertise of those industries through a consensus mechanism that's governed by democratic processes. I had council of the National Grid Association for way more than a century and exists to provide the standards and rules of the grain merchandising industry. It sets the rules and standards through member-run committees that devise and maintain the standards and bodies of rules and conduct. This isn't the only one out there. There's many of them that govern different industries. And what you would say then, though, is one issue with such a system is that it is not legislatively authorized and therefore doesn't have government-backed authority to enforce its rules. Now, the NGFA addresses that issue with a commercial arbitration system that's designed to resolve disputes over bulk grain transactions. It is one of the oldest commercial arbitration systems out there, and it is designed to be a more efficient way to resolve disputes than conventional court litigation because it avoids lengthy pretrial proceedings and speeds the case to resolution before a panel of 3 unbiased expert arbitrators who consider the case, make a decision. That decision is then written up and published. The losing party is bound by contract to abide by the decision. And we know through experience that there is a Federal Arbitration Act out there that will back up those decisions in federal court. The Federal Arbitration Act has been upheld many, many times by the U.S. Supreme Court. Tony, do you have anything to add to that?
Yes, I'd like to pick up on what Chris said about bringing clarity to the market and having a space where everybody can play by the same rules. If you look at his experience going back with the NFA, he's done a lot of setting the rules. I think he ran the NFA. He developed a lot of the codes of conduct. And now he's running basically a crypto trading firm here in Chicago. So he's very interested in moving all of that experience into the space. We had great help from Gabby as well, who brought a global perspective to this, working with many of the global organizations. So it's not just the Chicago view. And we did a lot of work in figuring out what exactly members and prospective members might want through surveys and long dialogues. And as somebody mentioned, we need a portfolio of divested interests, and we have that, but they're also diversified. So we surveyed potential members here in Chicago and elsewhere and found out what people want. And going back to what Chris said, they want us to police the market, if that's not too strong a word. There's a lot of uncertainty, and the regulations are not clear. So our goal is to try and clean up the market, bring clarity and integrity to it. And I think we've worked with the right people, both locally and globally, to get those regulations in place. And they will continue to evolve. I'd also mentioned that George Dowd was very involved and brought experience from the FX side. So we adapted some of the code of conduct for the FX market, which again is global and not that dissimilar to what's going on here. It's a true global perspective, I believe.
All right, thanks. So what about the GDCA? It makes it a self-regulatory association as opposed to a self-regulatory organization. And what exactly about the Global DCA is actually regulatory? Matt, you can take that.
Okay, thanks, Lanre. I don't see any space between the term self-regulatory organization or SRO and the term self-regulatory association. They both share the same objective of essentially being consensus-driven organizations formed of members who get together to set standards of practice in the industry. We have had discussions in the past with regulators who would prefer us to use the term self-regulatory association. So we've decided as a group to go forward and use that so that we're not confused in the end, especially with retail customers, by being confused with a FINRA type of an organization that actually has government authorization powers. So in terms of if there is a difference, that would be the difference. But as I maintain in my own comments, I do think that a healthy, functioning, well-designed alternative resolution system can basically be as effective a mechanism to enforce the rules of conduct that the organization puts out than a group that would have the government authority to actually bring court actions and prosecute cases against bad actors.
All right. So there are lots of organizations out there, associations out there in the blockchain, digital assets, cryptocurrency, finance. What makes the GDCA different, and why should I, as a business person, as a company that's looking to obviously profit from this industry, why should I join the Global DCA?
That's a very good question. And that's one that the board of the GDCA struggles with moment to moment all the time. And what we are doing is developing an organization that will be dedicated to confronting and resolving in some fashion the various issues confronting its members in the operation of their business. There are certainly regulatory frameworks that exist out there that apply to the business. We are not looking to replace that, or certainly not criticizing it, but there is certainly a space between all of those regulations, that various patchwork of regulations. And when I talk about regulations, I talk about the regulations that flow from the SEC, the regulations that flow from the CFTC, the various banking regulations that we have out there, and then the state regulations. So that's the patchwork of regulations that we have out there. And yet we still see bad acting going on. We still see a hesitation by the current regulators to endorse the introduction of certain products. What comes to mind is an ETF based upon a blockchain-related digital asset that is yet to be okayed by the SEC, primarily because the SEC is uncertain that the market data that is coming out of exchanges that trade these assets is actually, they're uncertain about the integrity of that data. And so in order for it to be more comfortable, we think that there has to be an association of industry participants that comes into the space and voluntarily promotes standards and so forth. And so when you say, what are we going to do that is unique? We are going to do things that, have been done before, but in this space. So the unique part about this space is the fact that it requires things that are not there at this point, which we are going to do by bringing in, various models that we know that work, but into this new space. So what does that mean? Well, certainly we're going to bring in governance, standards and procedures and so forth. Those are going to be promulgated by industry-driven, consensus-oriented types of processes. We're going to operate transparently. This isn't obviously a secret organization or anything like that. We would like to publish that what we are doing and why we are doing it. I also want to say that this organization is different because it is essentially a grassroots and industry-led movement. We did not 2 years ago set out to start this SRA type of an organization, with any sort of focus at the time. This has grown out of an effort that came from a fairly loose long invitation list that was essentially a Chicago local-based organization called FinTank. And they developed a mailing list and invited people to various events and held events. We saw Congressman Foster speak at one of those earlier this year. There have been other years. These people that run it, David Carmen and George Vucetich, who are instrumental in what we've been doing, they continued with their efforts to try and bring attention to various issues and so forth and so on. And then over time, it took on much more of an organized tone as we started to, get together and talk about the various issues that we all had. So I want to emphasize that this is a grassroots industry-led movement. This is not something that we just decided one day, we need this, let's go out and do it. It has really, truly evolved out of a very loose grassroots kind of organization. We also are looking to have the inclusion and inclusiveness, and we want it to be accessible to everybody that wants to be a member. We also feel like we're independent. We're also going to be, as we've said, try to promote self-regulation. And then finally, we're going to introduce a alternative dispute resolution system or arbitration system that's going to be a core component in how we enforce our rules and standards.
I'd like to take a step back a little and talk about one of the real-world problems we ran into at GRIP. GRIP tokenized one of its funds, so it's totally compliant in 52 jurisdictions around the globe. When we go out to clients to talk about it, the first feedback we heard was, this is crypto. I don't want to talk about it. I don't want to touch it. I can't be involved in the crypto market. And of course, that's not true. So one of the problems in the market is a lack of education and training. And we hope to do something about that. We've talked to the regulators, and we've had feedback that said, if you can help with this, go out there, educate people, certify them to whatever level you can, and raise the boat for everybody. And the other area that is key to myself is market integrity and transparency. Right now, you can't safely know when you're going to get done, what price you're going to get done at, like in other markets. So we'd like to raise the bar so that the standards are there. We have the tools, we believe, working with our partners to go in and actively monitor the market, identify bad transactions and bad actors, and help clean it up. And I think that's important. It's on the top of our list. And if you look at, Fidelity's recent report about digital assets, it's on the top of their clients' minds as well. So regulation and certainty and cleaning up the market is very important.
Yeah, I would like to add to that as well, because when we first started out with our business, we had approached, because we felt we had created the most innovative financial instrument ever. We basically use Ethereum tokens to sort of mock up a type of derivative, but we don't really call it a derivative. And we went out looking for clients. We actually approached Chris Haymeyer that spoke earlier. And he said, well, that's a little gray. And that's pretty much what we heard from everybody. Everyone said it's gray. So there ain't clear rules, clear standards, and basically a way to do business and clearly be within the confines of the rules and regulations of the various governing bodies. And so we were really attracted to the Global DCA because, one, it shows that we're raising our hands and saying we want to abide by rules and regulations. We're a legitimate business. We're going to do things the right way, and whatever standards and best practices are available, we want to follow all those processes. And because when we do that, it helps the business. It basically comes down to dollars and cents, right? If our clients or potential clients can trust what we're doing, and they can trust us because we are part of the Global DCA that obviously has all this regulations and best practice and enforcement based on the arbitration rules, then there's a little bit of comfort, or a lot more comfort with the client, with potential clients, basically do business with us. And so that's, from our perspective, that's what's really the most attractive thing about the Global DCA. So we're calling it a global DCA. What exactly about it is global, and how do we plan to bring in participants, stakeholders from around the world? Because right now it's leaning a little American, although I guess Tony is not. Well, Tony and I have accents, so we're not purely 100% American just yet. But how do we now bring in global participants and basically have everyone around the globe basically have an input as to how this standard should be implemented and the various structures that we need to put into the global DCA? How do we attract global participants? Tony, you can take it first.
So we're not looking to replace any existing legislation. We work within the constraints of what legislation is there. And if you look at the United States, there's certainly a lot of legislation and a lot of different legislators. And certain areas of crypto fall between the cracks. And we'd like to start by focusing on that. And as I said before, cleaning up the market. That will bring flows from U.S. investors, flows from outside into the market, and help bring liquidity and clean up the market. If you can add transparency to that and have a harmonization of rules globally, that will be very attractive to investors at all levels, from individual traders to institutions.
All right, Matt, do you want to answer that?
Yeah. I think that, first and foremost, the nature of this marketplace is global. You can do business with somebody across the street as easily as you can do some business with somebody across the world, obviously. So the technology is there, and so you cannot ignore the fact that this market is a global marketplace. And so if you're going to go out and set standards and rules of conduct and so forth for this marketplace, you can't ignore that there are non-U.S. actors in this marketplace. So you are going to have to be open to attracting that kind of a membership base. That said, we're in different time zones. I certainly don't know very many people in South Africa or Hong Kong, certainly not as many as I know in New York or San Francisco. So this is going to be a word of mouth type of an effort. It's going to be an accretive effort. Over time, we are going to gain global recognition. And as we do so, we will get acceptance globally, and we will get members from those various jurisdictions who are also serious players. We don't have a monopoly here in the U.S. on, being serious about complying with rules and standards. This is a desire shared across most people. And I believe that it was Chris Haymeyer who said that we all, even if we're from a small town, we all pretty much want to play by the rules. We just want to know what those rules are. So I think that with that simple proposition, we will be attractive to a global crowd. Now, one of the things that people wonder about is, at least in my crowd, my lawyer, attorney, friends, and colleagues and so forth, is about how do you enforce these standards on a global basis. I have a question from a very old friend of mine. His name is Thomas Kraba. And he writes, could you give an example how self-regulation works for something which by definition is decentralized, globalized, and anonymized to the largest extent possible? What a wonderful question. As a general counsel in a business that is in the crypto and digital asset space, one of the things that we are worried about and have to do, probably one of our biggest worries, if not our biggest, is anti-money laundering, KYC standards, and how they apply in this space. It's very decentralized. It's easy to conceal your identity and so forth. And what AML KYC demands is that you know who you are doing business with. And so it's really just the application of old traditional standards to a new product or space. And so I have a choice as an actor in this space to do business with somebody. And if they are going to want to do business with me and my company, I'm going to tell my company and my employees, don't do business with them if they refuse to comply with our simple request for compliance with AML. And so if they refuse to provide us with identification as to who they are, passport, driver's license, or so forth, then I'm going to tell my business not to do business with them. They're free to go out and do business with other people. I think it's very risky to do that business, but that's how I see self-regulation working in this space. It's a matter of choice. And we are going to choose, as Drawbridge Lending, to devote our efforts to building this organization that will build up standards that are going to be voluntarily applicable. You need to choose to opt into this system. And once you do, though, you will enjoy its benefits. Now, let's talk about how to enforce those decisions. So let's just say I'm doing business. Let's just say I'm a Nigerian businessman, and I'm doing business with a Belarusian company, and I get ripped off or feel like I've gotten ripped off or haven't gotten the benefit of my bargain with that Belarusian company. So how, under our framework, how do I proceed? Well, I would bring an arbitration dispute against that company. It would be administered by the GDCA. And let's just say we get to the end and I win the case. They owe me money. The Belarusian company thumbs their nose at it and says, come and get me. And so I have a choice. I can go and try and get that arbitration decision enforced in the Belarusian courts. Now, we know here in the United States, the U.S. Supreme Court has said that's a good decision. We will enforce it. Not entirely sure if the Belarusian courts are going to enforce it against their own resident. And so in that respect, and let's just say they don't, what's to be done? Well, we do know that these are arbitration decisions that are written and published on the GDCA website. And when they're published, they will be published and there will be somebody who loses. And if they default on that, that default will be transparent as well. So by the very fact that this Belarusian company has refused to abide by the decision, that will be publicly known. So I think that that's how this is going to operate. I hope that addresses some of your question, Thomas. Please feel free to reach out to me and let's reconnect because it's been too long. But let me stop there.
I'd like to just add to that one area that's particularly important to me. We do have and we're putting in place tools that will allow us to monitor the market in real time, to see what the transactions are that are flowing across the network, who they're flowing to, and if you put in place, here's the list, minimum standards for insurance, security, AML, KYC, custody, trading rules, transparency, and audit, then it starts to look like any other market, and the flows will come. So that's our goal, is to monitor what's going on in real time, highlight dubious transactions, highlight the bad players, and our members are very interested in that service, but it's not just our members, it's other people in the community as well. So we think we can actually raise the bar quite a bit in real time.
Yeah, so to follow up on Thomas's question, and just to get a little bit deeper into the question as well. So crypto and Bitcoin was obviously the first of the blockchain technology to basically gain popularity and coming from the Bitcoin white paper. So it was born to be essentially almost anti-government, but without the ability for government or any sort of regulatory body to interfere with whatever you do on the blockchain. And that was the beginning. So what do you say to people that I would say to you that why not go find your own technology? Why come to this blockchain world, to this cryptocurrency world? Because we developed this to pretty much not have the controls that you're currently trying to put on us. What do you say to people like that?
I know Matt has very strong feelings about arbitration. I have to tell you that you would think those people don't want arbitration, but we actually have some of the DeFi crowd coming to us and saying, can you help us with this? There is no method right now for dispute resolution in that area. And obviously the rules are vague. And if they don't do AML KYC, anything could go wrong, anything could happen. So we can help them to help themselves.
Yeah, that's right, Tony. Another thing to think about is the fact that, theory is all well and good, but when you get ripped off, there's a universal humanitarian feeling of, hey, how do I get redress? How do I get my money back? And those kinds of things come through the introduction of standards and enforcement mechanisms. It's as old as time. We're not reinventing anything here. All we're doing is recognizing that there is a need for these mechanisms in the marketplace right now, and we don't have access to everything that we need in order for this space to grow. Now, that sounds cliche, but I can tell you from experience, Drawbridge lending has been open since May of 2018. I know GRIP Investments has been open a fairly short period of time. And we come across every single day this age-old thing called due diligence with counterparties, with people that are going to provide us credit, with people that are going to provide us insurance. And guess what? In the crypto space, we fail like 98% of the time. Or they say, in order for you to do this very traditional thing that we will provide to you, you need to pay us a gigantic premium to do it. Say insurance. So insurance, to get insurance in this space costs an arm and a leg. And what people will tell you is that you get a Swiss cheese policy, which really doesn't cover all that much for all that money you're spending. What if we were able to develop standards that if we abided by those standards in our back office and our operations, reflected that we run our business well and address a lot of the risks that the insurance company is concerned about? Well, now I would firmly believe and posit that insurance company would gladly come in and reduce its price just because they don't have to do all the work and somebody else has come in and given it a good housekeeping seal of approval. It's those kinds of things that we see a need for, and it's that kind of work that we are going to embark on and do. But we have to get started now. Tony, do you have anything to add?
I would just say that over the last 5 years, it's obvious that the regulators are moving much slower than the market and the technology. That's exemplified even more recently this year with DeFi, which is, I don't want to say it's out of control, it's moving at its own pace, and the regulators are looking at it, but they're looking at it to see what's going on. They have no idea how to regulate it, and I'm not sure what the answer is, but to me, the answer is working with these people, and that's what we're proposing to do, to bring everybody into the fold, find out what their needs are, and work with them to act as a go-between with the legislators so that the legislators don't come in with a heavy hand and start shutting things down. We believe we can do that very successfully.
All right, so we're getting close to the end of our panel, but I have one more question, and that has to do with the future of crypto. So right now, we're still in the early stage. I know crypto has been around for 5-6 years, probably longer, but the technology is evolving. When it first took off, initially it was just purely about trading. Everyone had the fear of missing out. Everyone was trading, hoping to make a Hail Mary transaction and retire and basically get rich off trading crypto. And so your Uber driver, your cab driver, everyone had an opinion of what any token was going to do. But the technology it's evolving. So how would the DCA evolve as the technology itself evolves? So you mentioned DeFi, where previously, if you wanted to make markets on an exchange, you pretty much have to constantly keep changing your quotes, right? Change your prices just to reflect the current value to get to a fair value. But right now, with a lot of DeFi technology right now, you pretty much just put your two-sided quotes into a pool, and the smart contract itself basically does all the adjustments, and everyone gets a share. You get a percentage of the trading cost. So the technology is changing, and that's just the current iteration. What about the DCA, your current standards and your regulations and the procedures that you put in place? How quickly can those change to adapt to the ever-evolving cryptocurrency, blockchain, digital assets world?
What a good question. Have we run out of time to answer that?
This is the last one.
No, the question is going to be the thing that drives us. But the thing that I would say to address that is this. The goal here is to not reinvent the wheel, as I've said, to set up an organization that is based upon other models that have stood the test of time. And the reason that they stand the test of time is that they've become flexible and adaptable. I believe Richard Sander, who has characterized himself as a 700-year-old man, and has, over that 700-year period of time, which is kind of a biblical epic, has seen it all. And he says that flexibility is one of the things that is one of the two rules that are always going to be around. And so we need to establish an organization that is flexible by establishing, call them generic functionalities. And those generic functionalities will never waver. Those generic functionalities will include standards and best practices, education, advocating on behalf of the industry, and dispute resolution. Now, the content and subject matter of all four of those things will continually vary and change, but we will have committees and structures and frameworks in place that will be able to, on the fly, address things as they change. And it's not just going to be like these inanimate things that are put in place to address them. It's really going to be member-driven committees that are put in place to address them. And those members are from the industry, and they're going to be the experts that we need in order to get the content necessary in order to set these standards and to do these other things. So we are now embarking on a membership drive, and part of the reason for having this launch is to make the point that we are going out and we're going to be asking people to think about becoming a member and to think about the importance of setting this up. Yes, we do believe it's in your self-interest, but in order to achieve what we need to achieve, you need to become a member and then set aside your self-interest for the interest of the public good. That's basically what we're trying to do. Tony?
So Matt's background and mine are very different. Matt is a compliance person and a lot of other things as well. My background is technology and trading, particularly automated trading. So I feel like I've been on the bleeding edge. When I first met Matt, I explained to him that back in the day, I wasn't a big fan of compliance because all they did was slow me down. But as we rolled out products globally into like all continents, you have to realize that they become your friend and become a partner. So the key things for DeFi and other areas as it evolves is engagement. We have to help them engage with the regulators and help the regulators understand what the technology is, its possible impact, its risks, and how those can be mitigated. So everybody can play in the market without blowing it up, because it can blow up. DeFi can be a bit of a bubble, as you can see. Can I turn the question around? Lanre, you took a quick look at this area. What did you think? DeFi?
Oh, I think it's amazing. Now we were looking at the implementation of Uniswap in particular, and it's pretty amazing. And when you talk about regulation, so with DeFi, and I don't know how many people in the audience are really familiar with DeFi. Well, at least the Uniswap's implementation of decentralized exchange. But you essentially you put your, say, Ethereum and DAI, you put in both tokens into a pool, and that's it, right? Obviously, you try and put it in at the right price, and there are tools that will help you do it right. You put it in, and that's it. You're not basically writing some sort of market feed handler that's modifying the price. The smart contract itself just modifies everything for you, and so it's great in that regard. But with regards to regulation, the one part about Uniswap and pretty much every DEX that implements a similar model is everyone can see what's going on the blockchain. So therefore, if I can see it, then everyone else can see what all the transactions are going. And so I see your order going into Uniswap, and it's gone through the node, and I'm running a node on the Ethereum network. I can front run your trade very easily because the Ethereum currently works based on gas price, right? So if I offer to have my transaction done at a higher price, it's going to get done before yours. So if I decide I see your transaction come through, it hasn't been put on the blockchain yet, but then I put in mine to front run your order, then I will get in before you. And so obviously front running is clearly illegal, right? Outside of, I guess, decentralized exchanges. But you can do it. And that's actually my perception of why it's pretty much taken up, because so many people can basically, you see another come through, you're now a Goldman Sachs, you're a Citadel, you're pretty much what the big boys used to see, anyone can see now, and anyone that can write a fast enough program can front run anybody else. And you just bid a little bit higher than the other person for gas, and you're in there. So there's got to be standards, and we know front running is bad. It obviously leads to higher costs for traders, for individuals that are just trying to buy or sell. And so there's got to be some sort of structure and best practices, because at the end of the day, businesses have to be fair, right? It all boils down to fairness. I mean, you can talk about how cryptocurrency and the blockchain was basically created so that we don't have to have regulation. We don't want to be constrained by regulatory bodies and whatever fiscal policies going on in any country. But at the end of the day, we all want to be fair, right? And so decentralized exchanges, we're looking at the first iteration, but there clearly holes for where people can be unfair. And that's where I think the Global DCA comes in, where you can sort of put in structures that basically says, look, here's the best way to do this that's fair to everybody. And it doesn't mean you're not going to make money trading, right? We're all in this for money at the end of the day, for business, but everything has to be done with openness and just a fair level trading field. To throw in the name of my company in there, but everything has to be done fairly. All right. You have anything else to add before I hand it over to Gary?
Can I just say one thing, that it's very similar to the evolution of HFT over time, where the HFT guys were the bad guys. They knew how to use the technology to stay ahead of the markets, and now everybody's doing it, including Citadel and Virtue. So everything's automated. 80% of the market's automatic trading. We'll get there. And again, the three key words: engagement, engagement, engagement. We have to help the market understand the technology and make sure that they're playing by the rules. And if those rules are not clear, then we need to work with the participants and the regulators to clarify them. And we can do that.
Absolutely.
There's new protocols coming out, by the way.
Yeah, well, I think there needs to be a fair protocol that would help make it fair, right? It's great. That's why Uniswap became a $2 billion market in 6 months.
Like that, yeah.
Everyone's front running, and I don't even talk about the flash swaps where you don't have to put up anything at all, and you see trade.